investors. Welcome to another episode of Ritter on Real Estate, where we teach you how to passively invest like a pro. Today, my guest is Mitch Stephen, and Mitch has been a real estate investor for 27 years. And in that time, he's raised 26 million in private money, and he buys 4 to 5 houses a week. So he's built up a robust strategy to support that endeavor. And he's built up a fairly sophisticated model where he's got a few different layers of real estate investing. And so excited to dig into all this and understand what Mitch is doing today. Mitch, thank you so much for being on the show.
Hey man, thank you so much for having me, Kent. It's a pleasure to be here.
Yeah, absolutely. So before we dig in to everything that you have going on, tell the folks a little bit about who you are and how you got to be where you are today.
Uh, I had a high school education. I went to a couple of semesters of college. It wasn't for me. Got cut from the football team in about 30 seconds and didn't know where to go after that. Spent about 15 years wandering around trying to figure out where I belonged in the planet. And at about age 34, I stumbled into house flipping back in 1996, and I did 45 houses my first year. I did 65 houses my second year. I did 150 houses exactly my third year. And I have bought a house. I've bought about 4 to 5 houses every week for over 2 decades. Like, it has never stopped. I started talking about and learning about real estate one day, and the conversation never ended. I've had conversations every waking moment about real estate. I don't know why I'm passionate about it. No one in my family was ever passionate. No one in my family was even an entrepreneur. I don't know where it came from, but I found where I belong. And along the way, I would find other opportunities, which is almost the curse of an entrepreneur, right? Because we see opportunity in everything, and you can't do everything. I learned all that the hard way. I learned everything the hard way. I wrote a book about it called My Life in 1,000 Houses, Failing Forward to Financial Freedom. It's really should be now My Life in 2,500 Houses, but I wrote the book a little while ago and I haven't changed the title. So I'm just an average guy with a lot of common sense who seeks pleasure and tries to avoid pain. And every time something happens to me good, I try to figure out how to make it happen to me more often. And every time something happens to me bad, I try to figure out how to make that never happen again. And I got good at it.
Yeah, I appreciate that. I mean, I similarly just share a passion with real estate. Don't know exactly where it came from, but it just makes a lot of sense to me and something I've fallen in love with over the past 6 or so years, and now do full time on my own. So I totally get the path. And similarly, I didn't grow up in an entrepreneurial family. I grew up kind of very blue collar family, and yeah, I just got bit with the bug though. And I understand from an entrepreneur standpoint, it's like once you get out there and once you start looking at everything, there are just so many opportunities abound, right? And you start to have to really be selective.
The thing was, I stumbled into some money by accident.
Mm-hmm.
And I did a nothing down deal. And then that's when it dawned on me, that's what the hell Robert Allen's talking about. You could read all you want to, but until you get a concept in your heart, you don't really own it, right? And so I'll read these concepts, and then I'll accidentally or find myself in a position to actually do one. And that's when you learn it. Like, okay,
Mm-hmm.
I understand. I bought my first 100 houses on credit cards. All of them, 100%, 0% interest. No origination or anything. Maybe a little bit because they charge it $50 for the credit card check. In my town, San Antonio, Texas, in 1996, there were houses. I'm sorry, I was headed to the ranch, so let me get this off. There were houses all up and down the lesser parts of town, south side, west side, east side, beyond the middle of the city, middle through the city. $8,000, $10,000, $12,000, $15,000, $20,000, 25 or 30,000 was a big deal for me. So I figured out early that I could get credit cards because I had good credit. And back in a different era, if you remember, or you may not remember because you might be too young to remember, but if you had good credit and you applied for a credit card, they gave you the card and they gave you all the cash advance limits and everything, and you could just keep applying. I had 50 credit cards that all had $10,000 to $15,000 cash advances, if not 20 or 30,000 cash advance limits. And so I would just put 10,000 on this card and 10,000 on this card and buy the house, and then 10,000 on this card to rehab it. It was 0% introductory offer money, and I didn't have any payments to make for 6 months or a year or 18 months, depending on the card. And I would fix all these houses up, and I would sell or finance them, and I would sell the notes all within, 60 days. And I did it 100 times in a row until I didn't need to do that anymore.
Yeah, I mean, that's fascinating. That's a heck of a way to get started. You kind of kick it off with a
But
bang.
what allured me was, first I accidentally made some money. The money was the lure. But as I got into the game, I love the game so much because this game of creative real estate investing is such a wide, big game with so many opportunities and so many angles and so many choices that, good and bad. But there's so many good choices that I just got intrigued with the game. Like, wow, what a game. You think Parcheesi is good, you ought to try this, man. This is a game. And when you win, you can win big.
Yeah, it's addicting, right? It's definitely addicting. And so let's take a step back. So that's kind of how you got started, but you've developed quite a bit since then, right? You've gone in many different directions. You're doing a lot of different things, but as we were talking about previously, at the heart of it, it seems to me you've kind of got this kind of two-phase strategy, right? Where you've got this very active business or businesses that are going on, and then that's funding more of what you call kind of your forever money strategy, which we can talk about too, and talk about how you're funding your long-term investments through kind of this active business you've created. So can you outline for us kind of the two, and maybe there's more than two, but the different components, and then kind of how they fit together and your thought process as you were kind of putting this plan into place?
Yeah, well, there's at least 8 businesses, and sometimes I can't recite them all to you. I'm not a detail guy. I'm a throw all this crap on the wall, see what sticks. As the dust is settling, you'll see me exiting, and I'll be handing it over to the infrastructure. Okay, now go lease all this up, or go sell all these, or whatever. I don't hang around long, and I understand details as we're making the decisions. I got to clear my slate for the next thing. I don't have enough RAM. I need some more RAM. So, like, you put information in this ear and something falls out this ear. So,
Sure.
so I'm going through town. I'm buying all these houses and I'm seller financing them. It's like a sawmill. If you own a sawmill and your job is to make big long trees into boards, into lumber at the sawmill, then you're going to be left with a stack of sawdust. Now, you can pay truckers and people to shovel it in a truck and go throw it away, or you can figure out how to make a product and sell that sawdust. You already got the sawdust for free. What can you make out of sawdust? Can you add some glue and make a 4x8 board, a press board? Or can you poison it and put it in bags and call it ant poison that you sprinkle around ant piles? What can you do with this sawdust? Because you have an abundance of it. It's the same way with the businesses that I originated. I was having to collect notes, hundreds of notes a month. I needed a $25,000 software. I needed to spend $5,000 to train the people to work with software. I'm $30,000 in. However, the 500 notes that I have now are no challenge because this thing is so automated. It's easy. I can pick up 5,000 notes now and this thing will run it with not a ton of maintenance. So how do I get the note company to pay me back and then pay me more? I start servicing other people's notes beside mine. So now I have a note servicing company in Texas called Moat Note Services, like a moat around a castle. We do all your reporting. It's a business. When that business gets to about 4,000 notes, it's sellable for 10 million. You think that'll get my 30,000 back? It makes about $15,000 to $18,000 a month right now profit. How long does it take to get my 30,000 back? I got people running, working that I owe salaries to. Now that company funds those and people that run them, and my notes kind of get taken care of for free. I don't have to pay any servicing, all right? That's how all of these businesses are.
Mm-hmm.
They were like,
Mm-hmm.
I made a business out of the exhaust that was coming out of my tailpipe
Mm-hmm.
because there was a lot of it. And so that's the problem is with the entrepreneur. And I haven't said many
Mm-hmm.
things that people have quoted, but someone latched onto this that I said, and it's kind of been one of two quotes that I have. The hardest thing an entrepreneur will ever do is have one great idea and finish big. That's the hardest thing for an entrepreneur to do, because they get too many ideas and everything's kind of half-assed, and none of them really make it to the pinnacle. None of the ideas really make it to the pinnacle. So how to avoid that? How do you finish big, Mitch, with 8 deals? I have partners in every one of those, and their sole function is to run that company. I provide the sawdust. You, sir, know how to make boards. You're in charge of the board manufacturing. Mm-hmm. Don't ever call me about it again. I'm shipping sawdust to you every morning. That's my job. And I want 50% of this business. And that's how it works for me, because there is someone mm-hmm. in that chair that's only mm-hmm. looking and watching over the board making business.
Mm-hmm. Gotcha. So you developed this portfolio of companies. Those companies, you've partnered with folks to run the day-to-day. That's feeding this money back to you. And then you have the next evolution of the strategy, which is what are you doing with it long term, right? And how are you building wealth off that money that you're generating?
Yeah, so I read a book by Jack Bosch, and I always like to give him credit. He's a good guy. He's a friend of mine. I met him at a mastermind many years ago. And he wrote a book called Forever Cash. This guy comes from Germany, doesn't even know the language, ends up being a multimillionaire in the real estate business, a challenge way bigger than I ever had to face. I was born in this country and I knew the language, mm-hmm. I can't imagine these immigrants are to something you need to make note of. So he says there's one-time cash events, temporary cash events, and forever cash events. So the one-time cash events are like wholesales and flips, right? You buy a property, you sell it one time, you get one check, it's over. Got to get mm-hmm. another one. Kind of like creating yourself a job. And then there's temporary cash, which is like me. I buy houses for $50,000. I own, follow the theory. I buy houses for $50,000. I sell or finance them for $100,000 with 10% down, and I carry the $90,000 at 10% for 30 years fixed, no balloon. I am a mortgage collecting machine. I am the bank. I am not a landlord. I get payments on the house, but they're principal payments and interest payments. They're not rent payments. Okay. So if the air conditioner breaks, it's not my house. I sold it to the person who lives in it, who's making me a mortgage payment. So I don't get any phone calls. When the money gets in my bank account, short of a foreclosure, there's no reason for it to ever leave, because I don't have any liabilities. I'm the bank. I'm the mortgage mm-hmm. company. But that's temporary because notes expire. I get $10,000 up front, and I borrow the $50,000 100% from my private lenders. I borrow whatever the rehab is. In addition, whatever the closing costs. I don't have one penny in these houses, but I never let my private lenders in over 65% of what I'm going to sell or finance it for. And I average only letting my private lenders in at 58%. Okay. Just 65 is the most I'll ever let my lenders in of what I can sell or finance that house for. And so I'm getting $10,000 up front to run my household, to pay my car payment or whatever. And if I do that 8 times a month, which I average about 100 deals a year for the last 20 years, that's $80,000 in down payments. It's enough to run your household, right? And then all the payments I'm getting, let's say today I have 300 mortgage payments. I owe 350, they owe me 850. I average clearing $500 a month per note, positive cash flow with no liabilities. So if you have 300 houses for easy math, that means I'm collecting 150,000 a month in positive cash flow with no liabilities. Plus I'm picking up $1 million in down payments to get there, to create those 300 notes. But those notes will expire. So it's temporary cash. So you have to take all the money that you make from the one-time cash events and the temporary cash events, and so you can work yourself out of a job and buy your time. We've already figured out how to get rich. The next step is, how do I buy my time back? I have to get into a forever cash strategy that allows me to be free. I put all my money into self-storages. You would put all your money into apartments. Then you hire an apartment manager or a storage manager, and then you go on vacation for the rest of your life. It's not completely passive, because you have to watch apartment managers and storage managers, because if you don't watch them, they'll steal all your crap and they'll run your business in the ground. But you know what I'm saying? You can run your business an hour or so a day, or watching out of the corner of your eye. Or if you don't even want to do that, you hire a CFO and you give up a few of the $2 million you're making a year. You give up a couple of $100,000 and you don't even worry about that. So the forever cash strategy, I lucked into. I was buying some storages. Turns out I already had a forever cash strategy in mind. I didn't even know that that's what I had. But when I started to see people, liability lawyers and attorneys were going, well, you need to put some stuff in some different buckets. What's your highest risk? I said, well, I got all these storages. I said, put them in this bucket. I said, well, I'm flipping these houses. Well, it's got a different kind of risk. Put it in this house. You got any rentals? Yeah. That's houses? Yeah. Put them in a different bucket. So I started seeing these different categories. I thought, damn, this is my forever. This is the one I never sell. This is the one that pays me forever. I up one day, I had always just kind of thrown my money over to a storage. I'd buy a mom and pop out around the lake where I lived. I couldn't afford AAA Class A. I didn't want to borrow money. I was scared of debt that I had to sign my name to at the time. Guarantee, personally guarantee, because I wasn't sure of myself early on, 27 years ago. I would borrow private money, collateral only money, where they had good collateral way above whatever I was borrowing, so that it would never not work out for them, even if I failed, because my reputation is very important to me. But I would throw my money over there and I would go flip houses. One day I looked up and I had over 1,000 units, and it was netting 800. It was netting 800,000 a year with debt I still owed. Now this debt had gone down to only 5 years left or 7 years left, but I'm still making payments like the first day, So I turned around and said, this is a business I never sell until I'm just too old to police it. And then I should have enough to take me to the end of my days. I don't really plan on selling, because my daughter's been in the middle of my business for 27 years, closing every deal in and out. She understands how to run these things. So, it should just be passed on to her. But you got to move to a forever cash strategy, which is some kind of business that you rent, or it's a business that you own that you don't work in, that you operate as the owner. Not even the CFO, because the CFO has a job, or the CEO, they have a job. You're above them, the owner. You know what I mean? So
you've got this active strategy that you're working in, right, and developing, and then you've developed now this mindset, this forever strategy, which I think is great. I think a lot of people that listen to this show, or folks that will invest with me or others kind of passively, are kind of doing, I think, in that same way. Their job may be different. Their job may not be real estate, but they understand that idea of creating something they can invest in long term, that's going to continue to build their wealth and generate cash flow, right? So I think a lot of our listeners really understand the same concepts of what you're talking about. Maybe not as advanced and not as large, but this idea of taking your job, where you're trading time for money, right? And then taking that money and putting that money into something that's passive, much more passive, right? So they continue to grow without you, and you can put that money to work, right? But that's ultimately the idea, very simply stated, of what you've implemented. You've got these active strategies, and then you're taking that money and not letting that money just sit on the sidelines. You're putting that money to work as well for you in self storage, right? And that continues to grow in value, and you're getting cash flow off that. And then you've just got this ecosystem that's all working together, right? And ultimately building you, like you said, a strategy where you can be much more passive in that. You can, like you said, manage an hour a day or hour a week or so, but starts to kick off income. And like you said, when you get to the end and you want to sell, you've got all that appreciation that you've gained. So
Yeah, or you can turn it over to somebody and remain as a consultant, for a salary. There's a lot of different ways to do it. The deal is, it takes a lot of good people around you, a lot of good people, if you're going to be free and not pulling your hair out and not go crazy. Here's the thing. I have gone into my private lenders before, doctors and lawyers or whatever, and showed them my strategy. The reason why I have $26 million, I didn't start out with $26 million. I started out with $50,000 from my dad, and then it kind of went on from there. The reason I have $26 million is I never missed a payment to anybody so far, knock on wood. You know what I mean? By the grace of God, and a lot of self-policing, Like, I don't go over 65%. If I want to buy a property that I have to pay 70% for it of what it's worth, then I got to put the other 5% out of my pocket. I mean, I never leave my investors with, they have a lot of room. Barring something just catastrophic, like off the charts, everything's going to be fine. I mean, you never can do anything that's going to solve the problem if a meteor, smashes downtown San Antonio and wipes it off the face of the earth. I mean, what are you going to do about it? So,
yeah. But your path to safety is really maintaining relatively low leverage, right? Is what you're talking about.
And when there are problems, I can solve them. I don't have to, because there are such margins, and I've left myself enough room, I can solve the problems without losing money 99.9% of the time myself, and I never have to even bother them. I mean, I'm not going to bother them. You know what I mean? The whole point of them loaning to me is to be passive and not have to hear. My house burns down, and it wasn't insured because I bought it at the auction that night or that evening, and then the people that they kicked out of the house burned it down that morning before my policy got in place. I mean, that's not my lender's problem. That's my problem. They'll never hear about it. I take care of my problem,
Right. Exactly.
And so 26 million bucks, before COVID, it was all out. My money's not like flipping money. It's not like, it doesn't go in and out. I need money for 10 years, 15 years that I can wrap, because my buyer owes me money for 30 years. So $1 million goes pretty fast when you're getting out 150,000 or 120,000 or 200,000 at a time, and then it's got to be out for 10 or 15 years. I got to keep getting more money, Now, at about 300 notes, you can't get more notes than that, because my goal was to have 500 notes, but once I hit about 300, I'll put in like 10 notes into the pile to have 310, but 8 people will pay me off that month, because my homeowners have the right to pay off their loans, sell their houses, and call me. And so it's really hard to get to 500, because you keep putting houses in, but all you're doing is just replenishing to stay at 300. Now, every time someone pays me off, it's a windfall, a huge windfall. Like I pick up 30, 40, 50,000, 100,000, depending on the spreads in these houses. But people, when I talk to my investors, I'll tell them exactly how I do everything. This is what I do. This is my formula. And then I got to show them how much, I show them how they're protected. And then I show them, and usually at that point, some people go, why are you doing that? I says, well, how are they supposed to have confidence I can pay them back if they don't see how lucrative my business is for me? And when they see how lucrative it is, then they understand, well, damn, he should have no problem paying me back if he's not a crook and he really has the heart to pay me back. There's no reason why he shouldn't be able to, So at that point, they always say, well, why don't I just do what you do and make all the money that you're making? Because I show them the secret sauce. I show them exactly.
Hmm.
And then I look at him and say, well, hell, don't do what I do. Just do what Tom Brady does. I mean, that guy makes 32 million a year. Do what he does. And they go like, well, I can't. I said, yeah, I know. I know you can't do this. It's taken me 27 years to get here. You ain't gonna, turn from being a doctor to a house flipper. If you want to, I'll help you. I'll try to help you, but they're not gonna do it.
Hmm.
So the point is, doctors and lawyers and other people out there, they have money. They either like what they do or they've run their gamut, but they don't want another job. They can't handle another job or they're done working. It's time for them to vacation or travel or play golf. And so people like you and I are a choice for them. You can go do what we do, but it's not passive. It's
right.
a full-time job. So we're here for the middle. You can sit there and do nothing, or you can gamble on the stock market and don't know, God knows what's going to happen. Or you can put yourself into a hard tangible asset that an average person is more likely to be able to figure out what's going to happen, or at least make an educated guess as to this is a good deal for all the reasons that you can find, and you can have a passive income with some peace of mind. There's no investment with no risk. It's actually against the law to guarantee that there's anything's guaranteed. You can't guarantee anything. It's against the law, really.
Well, that is right. That is right. But it sounds like the way you're setting things up. I mean, it's definitely an interesting strategy. And how did you, as you're looking at, whether you're buying houses, you're looking at storage to evaluate. I mean, how are you evaluating the markets that you're in? What are things that you're looking for when you're looking to make an investment? I mean, are there certain key indicators that you're tracking? And can you share a little bit of
Well,
that info with us?
I'm really looking for a discounted price on the way in first, because the old saying is you make your money when you buy, right?
Hmm.
But this is the second quote that I'm known for is you make your money when you buy, but you lose it in the rehab. So,
Yeah.
you know,
Yeah. I know exactly what you're talking about.
you're an investor, you know what I mean? It was a great deal on paper, and I bought it. I bought it tremendously well. I mean, I was a grand prize winner when I bought it. I bought it at a steep discount. It just got messed up in the rehab. The rehab got out of control. Something
Hmm.
happened. Um, so I'm always looking, but there are some things once you get mass, like once you have 12 or 15 storage facilities, if there's one that comes up for sale right next to you, you can pay more and not have to have such great spreads and get closer to market, if even pay market, because you're eliminating some competition and you have the business to overflow to it, or you know what I mean? There's
Hmm.
there's there's um there's synergy in
Yeah.
mass. And which is one of the things I like to say. If you're going to do something, do a lot of it. Don't do a little of this. I used to do that. I had some commercial buildings. I had some storages. No, it's two things, man. I flip houses and manipulate houses and seller financing, and I put it into storages. That's the two things.
Hmm.
Okay.
Hmm.
I have these other businesses, but I got partners and they run those, and they just, send me a spreadsheet or a financial statement every month, and we have a meeting when we need to. Those people aren't my partners because I didn't know them and love them and like them. I like all my partners are my friends, and I
Hmm.
trust them with everything I got, um, and vice versa. Um, I don't I don't pick partners lightly. You know, I'm a very good partner picker. I've had many partners. Most of them go over 10 years. Some of them are going on 15 years, 20 years. Um, I'm a good partner, and I'm a good partner picker, but
So how? So tell me more about that, because I think that's something that I see in the industry a lot. I see a lot of partnerships pop
they
up.
blow up.
I see partnerships that, well, they just pop up overnight. It's like, people meet and all of a sudden there's five, six people partnered together. I've always been more of the opinion that a partnership is like a marriage. It's got to be something that you come to just slowly. You got to date a little bit first. But
I see people who do this, they walk up to some stranger and said, you own this piece of land. Why don't you put the piece of land up and I'll do the development side and we'll split 50-50. That scares the living hell out of me because there's a lot of weird people out there and they don't think like you think. I'm not,
yeah.
maybe they're not right. Maybe they're not wrong. Maybe I'm not right. Maybe I'm not wrong. We just don't understand each other. You know what I mean? And so I see people do that all the time, but they would have to be, and if they're not, then they have this real danger, but they would have to be very tightly drawn legal docs and very tightly covered and extraordinarily well covered so that any debate there was among two was solved by the piece of paper that was written that everybody signed that went into the deal. And then there would be a lawsuit that couldn't be won if someone didn't apply, it didn't comply. But it's too much drain damage for me.
So how do you go about finding a good partner?
It usually starts grassroots. If you want to find a contractor that's going to be your contractor for the rest of your life, you go out and you hire 6 or 7 contractors. You give a job to this, a job to this guy, a job to this guy, a job to this guy, a job to this guy. But here's what I say: don't even give them the whole job. Tell them to write the job up and then say, what's the first step in this job? Well, I got to do the foundation. Okay, I'm going to let you the foundation part. I'm not giving you the rest of the house. We're only contracting for the foundation. However they perform on that foundation is how the whole house was going to go. If it took them 2 months to get the foundation done, which is way too damn long, then the whole house would have been months and months and months and months out. Fire the guy, get another person, and give them the next job, which was to fix the roof. If he fixes the roof, like, wow, that guy he told me yesterday he'd be on the job. He was on the job today. He finished the job in 2 days. He charged a fair price. Okay, let's give this guy another piece of the job. So that we do that on a couple of houses till we know them. Then we give him one house. Then after he's done 6 or 7 or 8 or 9, 10 houses, and he's still holding true to how I know he is, or how I think he is, now I'm giving him 3 or 4 houses, and then he finally becomes my whole guy. But I never go partner or give the job, the title and told job to anybody until I learn who they are and how they are under pressure when things don't go well on one particular facet of a tiny job.
Yeah.
And that's, I think, why that works out, because when we align with someone, business gets real easy. You can almost answer each other's sentences. Hey, I had to make a judgment call. Tell me what you would have done. I had choice A or B, and I would have done this. I said, I would have done B. He says, okay, that's what I did. I just wanted to make sure, and I need decision makers. I don't need them to call me on every damn thing. That's why I have them. If they start to call me too much, I say, look, you make the decision. We'll talk about whether I agree later. I need to get you used to making decisions on your own without having to call me all the time. Do what you would do if it was your house. If it was, it is your business. You own 50% of it. Unless it's just some extraordinary amount of money, make a decision, then let's talk about it. If it wasn't the right decision, we won't do it again the same way next time. But I can't be answering the phone that much,
Yeah. So it sounds like partnering your strategy, enter it slowly. Like you said, it starts grassroots, partner in small ways, right? Don't give the whole project at first, test it out, make sure it's going to work, understand how they're going to perform, how they perform on the small thing, kind of extrapolate that to largely how they're going to perform in bigger areas. And then over time, you find those people that you really sync up with, right? And then you can
same thing with my private money business. My private money business. One of the problems I had before COVID was I had so much money, I couldn't get it all out. So I started a hard money loan business to keep these people's money occupied and to keep them getting a rate of return until I needed it. I was giving the money to flippers. This is another one of the side businesses I have.
Yeah.
And a guy who was 15 years with Coopers and Lybrand and ran the Austin office for 15 years with his name on the door. He was a managing partner who was my partner in this loan business. Okay. He was way smarter than me. The thing was, I knew how to connect with the industry and get the loans that he needed, which we like to loan 50% LTV only.
Yeah.
or 55. And I knew how to find those people. And so I'm loaning out that money, but those people were flipping houses. That money's out for 6 months and then back in. And then if I needed it, I took it.
That's
Because
right.
my rule is I have underwriting that I buy houses by. And just because I have a shit pot full of money doesn't mean I start buying crappy deals. The rules, the underwriting guidelines that I function under and buy houses under, they never change. Doesn't matter how much money I have. So if I can only buy 83 houses in COVID, then I only buy 83. You know, and if there's money sitting on the sidelines, there is. So that's another example. And we only went 1 or 2 loans at a time. We set up the office. People would pay us back. In the first 2 years, we didn't do a whole lot of business. We were feeling each other out.
Yeah, so you
Then,
build it up slowly over time, and then you can get to a mass and an operating model that where you can really scale
same
it,
thing
right?
with the people that we lent the money to. We only, hey, I want to borrow money. They all want to borrow money on 7 houses. No, here's
Yeah.
on 1. Let's see how you do. Okay, here's on a second one. Let's see how you do. Okay, I'm going to give you 2 houses at a time now. Now we've done 4 houses. Now I'm going to give you 3 houses at a time. Okay, how many houses you want to do? Because I know you now. You want to do 10 houses, I'll give you money for 10 houses.
Well, I think that's great advice on how to partner, how to approach it slowly, how to build it up over time, and how to find folks that you can really just continue to scale through your own partnership, right? Through by creating these partnerships, you've been able to create a ton of scale in doing that. I think that's a really interesting model. Appreciate that. So that advice. As we round down the show here, I like to ask everybody a few questions at the end. It's called our keys to success round. So the first question I want to ask you is maybe you're thinking about this from, as one of your private lenders, but the question is, if someone's going to invest money with you or with anyone else, what is the one question that they should be asking the person that's sponsoring their deals or their investment?
I always prefer, I have a long list of people that have loaned me money for 10 years, 15 years, 20 years. They're still loaning me money. Some of them have been loaning me their money for 30 years. I take a random swath of those people with a little paragraph about how I met them and how long they've been with me, and their phone number and their email. I want you to follow up on my references because I don't want you laying awake at night having any anxiety over this, because no matter what rate of return you're making, if you're anxious at night wondering what Mitch Stephen's real motive is, then this investment isn't worth it, because there's no investment worth that kind of worry. And you don't have to have that kind of worry. So please call my references, all the ones I give you. And if you want more, I'll give you more, but I want you to call my references.
So check the references is a great way to start with somebody who you're going to invest with. I think that's great advice. Second question is, what are you most proud of in your career?
That I did it all and was able to get rid of alcohol and cigarettes, and there was no drugs, and let it drive me closer to God and further away from my vices, instead of, because a lot of times these AAA personalities that we have to get here, we'll get everything that we dreamed or exceed our goals, but we'll end up alcoholics or drug abusers, or greed has taken us over, or there's a lot of pitfalls to being wealthy and being successful, a lot of pitfalls. And I'm probably the proudest that I have been able to eliminate advices along the way, and that it didn't all about, at the end of the day, it's not all about the money. I mean, now at this career, I'm happy to do things at a higher for a higher reason. I'm helping with my success. I'm able to help a lot of other people accomplish a lot of things that they might not have ever been able to do. I'm changing people's lives in a lot of ways all around me, from my customer who was a renter who would never be a buyer, to my daughter who and my family members who maybe never would have found a niche, but they have a niche now, to investors across the country who I have helped break through the bondage of having a job. And the reason why that's important to become financially free at even the most modest level is because, say, like your job pays you $3,500 a month. Well, if you can get $3,500 a month coming in passive income into your mailbox, you can quit your job, and that frees up 2,600 hours a year so you can really learn who you are, become who you're supposed to be, and become good at what you're supposed to be good at in this life. And maybe you'll go out and help another 1,000 or 5,000 or 10,000 people. So my goodness kind of has a ripple of, my good intentions have a ripple effect way beyond what I could probably even measure.
Yeah, no, that's fantastic. And what book should everybody read?
There's a lot of them. It depends on the phase of where you're at, right? Of course, the number one bestseller of all time is the Bible, and it really gives us a map, of what we should be doing. All the self-help books in the world are just recanting the 10 commandments and what that says. I'm not really a preacher, but when people ask me about what's the best book in the world, that's the number one. After that, I read Think and Grow Rich, which let me know, I didn't have a college degree. It let me know that some of the wealthiest people in the world didn't even get out of high school. They didn't have a choice but to figure out how to make money. And then when they figured out how to make more money, they were the 100% recipient of the increase. So Nothing Down by Robert Allen, How to Function in the World When You Don't Have Any Money. When you don't have any money, you're a professional deal finder, and you get paid or can become a partner because you found the deal and it's your deal, and you say how the deal's going to go. You want 50% of that deal? Then say I want 50%. Someone else has to bring the money, and we split. You want 60% or you want 40%, whatever you want, but you're in control. But when you have no money, you can make yourself extremely wealthy by just being a professional deal finder, contract writer upper. Was that a word? Contract writer upper?
Gotcha.
You know what I mean?
I do. And lastly, what is your number one key to success?
Work ethic and integrity. I mean, I don't know which one comes first. I suppose integrity has to come first, because without integrity, nothing works. Nothing
Right.
works. Nothing works. You have to. I don't know how. I don't like to tell people how they have to live, but this is how I have to live. I look in the mirror and this is how I have to live. I don't mind losing my money. I'm going to be dead before I lose yours. I'm going to be dead.
mean, integrity is where it all starts, right? And then the work ethic to back it up. And you've obviously shown that through all that you've done in the past 27 years.
I spent 27 years. I spent the first years trying to build a reputation. I was going to die before I didn't get it. Now that I got the reputation, I'm going to die before I lose it, because it's too hard to earn. Symbolically, I died a lot of times along the way. I really had some problems, and I really, one of the reasons it took me 15 years to find my place was I would start businesses and I'd have to borrow some money, or I'd owe people money. And when they failed, I wouldn't start the next business until I worked my bartending job till I paid these people back. And it took 2 or 3 years sometimes to get that done. And so, a lot of people say, okay, and they start the next business. I might have been able to be successful 7 years earlier if I wouldn't have spent all these years paying people back. But yeah. I don't like the idea of not paying people back.
Well, I think there's a lot of integrity in that, right? Like we said. Well, Mitch, we're wrapping things up here, but thank you so much for being on the show today. Thank you for sharing so much value and just a really interesting perspective on how to build wealth as an entrepreneur, and how to turn your active job into passive forever strategy, right? So thanks for coming on and sharing with us today.
Can I share about my book and my website, or is that something you don't want to do here?
No, absolutely. Yeah, please go ahead and tell folks how they can get a hold of you.
Okay, so I'm the author of 3 books: My Life in 1,000 Houses, Failing Forward to Financial Freedom; My Life in 1,000 Houses, 200 plus ways to find bargain properties; and last and not least, the book I really wanted to write, My Life in 1,000 Houses, The Art of Owner Financing, about how I financed hundreds and hundreds of houses on 30-year mortgages of people. You can read all about it, see my podcast, see my 10-minute YouTube segments I put out every weekday at 1000houses.com. You can go to 1000houses.com, 1000houses.com, and go there and get so sick of me, it won't be funny, because it's all about me and everything I've got done and anything that I've ever touched. So you want to get real tired of Mitch Stephen, go to that website and see what there is. There's a ton of free stuff there too. I have been
Awesome.
chastised beyond chastised because everyone says I give everything away. And I say, if someone needs a coach, they know how to find me. If they can do it on their own, God bless them. Most people figure out that, you're going to pay the street or you're going to pay a coach, and the street can be a lot more expensive. So the ones I want to work with figure that out on their own.
Right on. Well, thanks so much, Mitch. And we'll make sure all that's listed in the show notes so people can find you. Thanks again for coming on today.